Near term, no. Employment's going to be on the weak side. Companies are still really focused on their profit margins, but employment's a lagging indicator. Quite frankly, the government did crowd out employment earlier over the past couple of years. The healthcare industry crowded out the private sector, education, and so we're kind of unwinding that right now.
Right.
So that's also a headwind, along with the private sector still a little bit focused on protecting their profit margins.
When do we get back to job formation that doesn't involve healthcare workers and bartenders?
Probably in mid 2026. You're seeing green shoots for the labor markets. You have profits improving across the board, both S&P 500, S&P 600, Russell 2000. So you're getting the breadth of now profits. Companies are willing to spend. They always first spend on technology to further improve their productivity and their profitability. And then you get employment. Employment is a lagging indicator. So you're setting the stage for employment as you move into the third quarter of 2026. And you are getting some indications that it is incrementally improving. Small businesses have stopped firing, which is, again, the first step in getting job hiring as we go through 2026.
We've got a little bit of hindsight here, Nancy, with tariffs. What happened with tariffs? How did they kind of impact the economy? How are they impacting the economy?
Yeah. So first, they are a tax. Tariffs are a tax. How much, as a share of GDP, you're about over 10% as a hit, up from 2% at the beginning of the year, and it's really a regressive tax on that lower end consumer, on smaller businesses. There have been some offsets where some durable good prices have gone up, other service prices have gone down, some food prices have gone down, but net, they have kept inflation. They have kept inflation sticky this year.
Going forward here, I mean, I'm looking at some of the early retail sales we got from Black Friday, Cyber Monday, whatever it's called, and so on. Seems like the consumer's still okay out there. How do you view the consumer?
So, a consumer out of a slump, consumer spending always turns up. I went back and looked at all cycles since 1960. Consumer spending always turns up before jobs turn up. Okay. Why? They're highly cyclical. Interest rates are down. Banks are willing to make loans. They're refinancing their credit card debt. They're using HELOC, going from something over 20% to something less than 10%. So it's not jobs that actually drive consumer spending. It's the Fed. And then as you go into 2026, we're going to get a big booster shot to disposable income from these tax refunds.
Nancy Lazar with us, folks, across the nation. We welcome all of you finishing out the year. Are we drowning in outlooks? Sam Rowe has like 47 outlooks to read just today.
It's okay.
He's in charge of reading outlooks. We listen to Sam Rowe, R.O. Look for him on Substack as well. But with Nancy Lazar, we have someone steeped in the linkage here of a nation's history into our economy. I look at Ken Burns' Magisterial American Revolution. There's a little bit of grievance there, which they highlight, versus just simply, Philadelphia against the king. It's a little more complicated than that. The Edelman Trust Barometer this year, the high level of grievance towards government, business, and the rich. And it's this daily grievance and agony within the news media. You fought that for decades.
Yeah.
Is it morning in America and we just don't know it?
Oh, I think that's been unfolding for 15 years. We've called it the U.S. manufacturing renaissance. Started back in 2010. Middle America is our favorite emerging market. You're seeing it certainly within unemployment rates around individual states that are more business friendly. So, and current policies certainly are going to reinforce bringing back blue collar jobs to the United States. And so we're quite excited. At first, the private sector started back in 2010. The corporate tax cut in 2017 reinforced it, and now full capex depreciation is another major booster shot for the kind of reindustrialization of the United States, which is a necessary backbone for every economy. I worry about Germany, Europe in general, by allowing China to come in and dump cars. You need a diverse source of jobs because we have a diverse labor force, and we need a big. Consumers need to have a choice of what kind of job. Not everyone wants to go to college. Nothing wrong with blue collar jobs. Nothing wrong with getting a.
Nothing wrong with blue collar jobs, Paul. Mrs. Keenan says we're hanging wallpaper. Have you priced out wallpaper hangers?
Oh yeah, absolutely. So,
there's physicians at Mount Sinai that aren't making that. Next
stuff. So give us a sense of kind of the labor market here, because it seems solid. The unemployment rate, the headline number that we all look at, seems fine, seems kind of full employment-ish. Is it as strong as it looks?
Well, under the hood, you have had some significant layoff announcements here in the fourth quarter, and so there is a chance that the unemployment rate does grind higher as we go into the first part of 2026, maybe around 5%. Some of the leading indicators point to about 5%, but that's historically, as you just said, still not high. And the labor market is a lagging indicator, and as we go through 26, I think it is incrementally going to start to heal.